Welcome, folks. We normally start every program with a quick mountain real estate update. Not today. We're doing a long mountain real estate update. We're doing the mid-year 2025 mountain real estate market review with today's guest. He is the owner of Appalachian Appraisal, Chad Hauser. Welcome, Chad.
Well, thank you. It's always good to be here.
You've been here a few times.
A few?
Mid-year review. When I started thinking about it, I thought of the old Disney ride, Mr. Toad's Wild and Woolly Ride, because that is how real estate has seemed to me this year.
How's your neck? Is a little whiplash there?
Yeah, that thing was so slow and boring. I remember standing in line for hours to take my sons on it. Oh my gosh, was it boring. But I guess in the time it came in, which was one of the original rides at Disneyland, it was probably pretty cool and exciting. But I can tell you, when I did it in the 90s with my two little sons, it had lost some of its pizzazz.
It had it. That's I've never been there, so that's kind of
You
not on my bucket list. Anyway,
lucky you, lucky you. All right, I've got to know. Everyone is wondering this. When's the big crash coming? I keep seeing headlines.
Yeah, that's a good question. I don't think we're going to see a crash, but things have definitely slowed down. I mean, I know you've seen it.
Sure.
I've seen it. If you look on every real estate tracking website, they all say, it's a buyer's market right now, and to some extent it is.
If I win the Powerball, I'm going to buy a big truck with a bullhorn and drive through the streets shouting, "Sellers, it's no longer 2021, 2022,
Yes.
But buyers, it's no longer 2008."
Yeah, it's not 2008, and I always find that interesting. How people benchmark whether you're buyer or seller, or where you're benchmarking to, because I talk to a lot of buyers,
Sure.
talk to a lot of sellers, and you're right. I mean, and the numbers bear it out too. That buyers seem to think that the market's a little worse than it is, and sellers tend to think that it's a little better than what it really is. And
I'm running into that each and every day.
Yeah.
What I've been surprised, I'm seeing more price reductions across the board in our market, and national stats show that's also true on the national level. What I've been surprised is how bold buyers have been. Instead of, I'm seeing offers that are substantially low. I mean, not even in the ballpark. I get that we have some properties listed high in our market, but if you've got something on the market for 500, 300 is probably a little low.
Yeah.
And I am seeing that a lot right now.
Yeah, I've heard that from several agents here recently, and in fact, one of them told me that and as a buyer, I think buyers need to understand that sometimes when you make those lowball offers, that you can really offend a seller, and at the same time, sellers shouldn't be offended that they get a lowball offer. I mean, that's just part of the transaction process or the negotiating process, but it still happens, and
I sometimes I will get an offer, and before I communicate it to my seller, I'll say to the buyer's agent, "Is this really what you want to do?" Because we both know how this is going to sound, and from here on out, it's going to be inches, not yards. It's going to make it a little more difficult.
sure,
And in fairness to both sides, I normally let my sellers know, look, everybody wants a deal. Everybody's going to come in low to start with because they're hoping for a deal.
Sure.
And it is not the first offer that matters to me, and hopefully not my client, but the second one. If they come in really low to begin with, if there is a second offer from the buyer, a counter offer that remains low, then I realize this is not my buyer. But if they make a jump, I go, okay, they're interested in the home. I'm not saying jump to full price, but
Right,
at least when I used to try cases and mediate with insurance companies, I'd say, we can't play ball if you ain't getting in the ballpark. And that's particularly true in real estate also.
Well, it's kind of like the old adage, you can't, if you don't ask, you don't get. And
Right.
so, a buyer's going to throw that out there, and maybe they hit the lottery on that first one and then find someone who's desperate. And That's why I think sellers shouldn't be particularly offended. You know,
Right.
it's just part of the process.
I am glad along those lines that the TVA has come out with the positive news in that there for a while I was already beginning to hear, oh my gosh, no lake for 8 years. You better accept pennies on the dollar for your lake. I had already started hearing that. I am so thankful that TVA expedited the process and came out with something more palatable, I believe, to
Well,
most.
I think they needed to. I think that whole thing was rolled out very poorly, to say the least. But you know, that it would certainly, if you went down for 8 years, it would definitely affect property values. I mean, even a year is going to affect them somewhat, I think. But when they put out there that 8-year figure, it really scared a lot of people, and rightly so.
Sure. As an appraiser, are you seeing prices going up, down? What are you seeing in our market now?
So that's always an interesting question, because I've talked to, you know, I talk to other appraisers, I talk to agents and brokers like yourself, and I get mixed reviews. Some people will say that prices are going down. What I started doing was going back and looking at resales of kind of like if you're familiar with the home data indexes or the Case-Shiller index. That's what they do, is they track resales over time. So the same property, so you're removing some of the
So it's
variation.
apple to apple, not
Apples
apple to
apples.
banana.
Yeah.
Even.
So
yeah.
so what I did was went back and looked at resales, things that had sold more than once over the past 5 years, and then teased out the ones that had sold recently and looked at, you know, how long has it been since that previous resale. So obviously, if something sold in 2020 and they're selling now, there's a greater monthly appreciation.
Sure.
Versus the more recent resales. But I'm still seeing anywhere from 0.25% to 0.5% per month appreciation for those very tight resales where you had two within the past, say, 24 months. So it's slowing. If you look at the graph, it slows significantly here as you get closer to the present. But we're still seeing some. I basically said, you know, we're basically keeping up with inflation is what's happening.
It's interesting. Before we came on, you and I were talking about that, and I think that I can't find it here. I was looking at the national stats, and that here we go. Most 2025 home price forecasts are trending down, which is what you're saying, and I found it interesting that most of them were just showing things slowly coming down. Now, two were quite negative.
Yeah, Redfin and Zillow.
Where the two, we're going down and we're going down
I
hard.
always remind people that A in Zillow stands for accuracy. That's just, that Zillow is the bane of every appraiser and real estate agent in the country, I think.
You don't rely on those estimates? Like when someone asks you a home value, you don't go, wait 1 second, let me go to Zillow.com?
So one of the things I try to ask people too is, you know, do you trust the tax assessors? I mean, really, because it's the same process. They
I think it's worse.
Yeah, well, yeah. Zillow, because Zillow, what Zillow does is aggregate and regurgitate.
Yeah.
They aggregate all the MLS data. They try to match it up with the tax assessor data, which is, you know, sometimes can be way off because they don't visit the property every year. And they aggregate that. They don't check it. They don't verify it. They just take whatever's in there and then they put it into their little algorithm and it spits out a number. So that's, you know, there's a reason that they got out of the home investing business.
Their CEO, I always, when folks bring that up, I always like to point out their CEO, when he sold his home, he sold it for 40% less than the Zestimate. 40% less than the Zestimate.
Yeah.
Ouch.
Yeah. So I notice on here that Redfin and Zillow both have their current forecast is for prices to decline 1%, whereas their original was up. But mortgage bankers, Wells Fargo, NAR, home price expectations, Cotality, and Fannie Mae are all they're still currently forecasting positive price price appreciation. I mean, it's down from what their original was, but it's still positive anywhere from 1.3 to 4%. So
nationally,
I think and I think 4% is probably a little aggressive, but I mean that would be just a little bit above inflation. So, all real estate is local.
I always say here in the mountains is where second home market. Our market is like the old canary in the mine. I mean, you put the canary in there, and before you send your miners in, did the canary survive or not? We're the first to smell the gas, so to speak.
It is, and I remember in 2008. So because we are such a second home market, these are not necessities. It's not like Metro Atlanta where someone has to have somewhere to live in order to go to work. These are in some cases, lake houses are prestige items, but they're secondary. They're not necessary for the most part. So, one of the things I remember in 2008, looking at things.
Let's dive into that right after we come back for these commercial messages. Welcome, folks. Today we're doing a deep dive, a mid-year review of our mountain real estate market here. Our guest is Chad Hauser, owner of Appalachian Appraisal. How long have you been doing appraisals in the mountains here?
Here in the mountains, I've been here since 2006, but I was originally licensed in 2001, early 2001, late 2000. So I've been doing it 23 years. It's 24 years.
If someone needs an appraisal, how do they reach you?
They can just give me a call. My number is 706-994-3665, or you can find me online at APPALACHIANAPPRAISAL.com.
Yep, I looked you up this morning. I always like to look folks up beforehand.
Sure.
What kind of appraisals are the market has slowed? I mean, we're down somewhat as far as the volume of home sales, and we're principally talking about homes today. Are you seeing that in your appraisal business? What are you seeing?
I am. Fortunately, I have a very diverse client base, so I do a lot of estate work. For attorneys and so date of death, gotta establish that basis so that Uncle Sam can get their cut if you decide to sell, and some divorce work. I do some refis. Of course, refis are down right now just because of interest rates. Most people aren't doing that. So, and then you've got the standard mortgage work that I do pretty much any bank, any and every bank around. I'm on most all the lists around. So,
are you doing anything with the county?
No, not really.
Okay.
As far as tax appeal,
yeah, I thought that you were with the county.
So I am not yet officially on the board of equalization.
Okay.
I have to take my class before I can.
And
it's a 40-hour. It is a full 40-hour. It's a week-long class. So, but
now,
I'm actually I started out in a tax assessor's office, so I actually have. Tax Assessor 2 certification.
Okay.
Yeah, there's 4, and you can get other certifications too. So
I've been on the Board of Equalization for Clay County for about 12 years, but I think this will have been my last year.
You've done your duty.
Yeah, well, they assess every 8 years, and they're going to be coming out with a new value. And I am fearful that instead of days of hearings, that we will have weeks of hearings like back in the...
Yeah, if everything is based on 8 years ago, which would be 2018, you're looking at a huge jump between 2018 and even though we're down
sure. Significantly over that.
Yeah.
Yeah.
Yeah. We're down from 2020, 23 maybe as far as volume goes, but prices are still way up because you've got that whole 2020 to 2023 period where everything just almost doubled in price in some cases.
Yeah, it was crazy. One of the things when we look at a crash, we talk about the crash, I'm seeing in some headlines, was Inman News came out with an article, Buyers and Sellers Face Off as Inventory and Delistings Rise. And there was a line in this article that I read that I thought was fairly spot on. It's this year's market is a study in contrast. Buyers are seeing more choices than they've had in years. Inventory is up, even here. But many sellers anchored by peak price expectations and upheld by strong equity positions are deciding to step back if they don't get their number. Looking forward, this dynamic will affect whether we tip from a balanced to a buyer's market, and if so, how quickly that happens. Inventory. I keep hearing that we've got a lot more inventory coming on. I'm seeing some, but not what folks are thinking.
That's what. So go back to what we were talking about earlier. Is one of the things that I kind of look. I don't look at just the numbers. I'm always looking at what's going on in the total real estate environment.
Right.
You know, what are my emails? I'm on a lot of agent lists just because I've looked up stuff.
Sure.
And so I kind of make a mental note of how many emails am I getting with price improvements, which is the new euphemism for price reduction.
Oh my gosh! Talk about double speak.
Yeah.
Yes.
But I'm kind of
is.
making a mental note of what is that. You know, if you look at the billboards, what are agents advertising for? You know, in 2008, one of the things that I was going to say was that I noticed if you're going along the highways, there's a lot of personal property for sale, lots of boats, lots of motorcycles, lots of stuff like that. People were trying to dump that stuff because they were going underwater. And then you started to see the rise in the second homes either be foreclosed or go on the market. I'm not seeing that. And that's why I say I'm not seeing a recession or a crash on the horizon, because I'm not seeing those little signs throughout the economy.
It's funny, the signs I look for. And it's funny you say that. In 2023, I started noticing 2023 and then throughout 2024, I started seeing independent businesses up here. You started seeing them putting balloons out front or those tall waving flags, and I thought they're needing more business. They're needing to generate it. Yep. And I've spoken with 5 restaurant owners or full-time managers of really good restaurants, and they've said, "Oh, it's been slow. And I just don't think we're getting the numbers up here that we've had the last few years. And I think that's rolling over into real estate also.
I think so. I mean, there again, we're probably benchmarking. A lot of those people are benchmarking to 2023, in 2022, where you had a lot more influx of people trying to get out of the city for a while, get out, get somewhere where they're back to nature and they didn't have to worry about the whole COVID thing.
This morning, I started thinking about our inventory, and through June of this year, we had and again, folks, this is based on a review of the Northeast Georgia Board of Realtors. That is the local MLS. So these numbers, there could be for sale by owners. There could be something that's not listed on our local MLS. But this is probably the lion's share of our market. There was 194 homes in June in Towns County. And then I started thinking, well, let's go back.
That's active, right?
Correct. Yeah, active for sale. Thank you. And then I started thinking, well, you know what? Let's go back for the last little boom prior to COVID. So I went back to 2019, and we're going from this year 194 to 274 homes. So just shy of 100 more homes.
Right.
About 80-something more homes.
So we're down 100 from 2018 as far as active.
Sure. But then I started thinking, but the crash. Let's go back to now. We started feeling it in 2006, and the numbers bear that out. In 2006, we had 261 homes to sell in Towns County. In 2007, 202, and then the overall crash nationally, 136 in 2008. But in 2008, in June, there was 470 homes for sale. Now, that's 470 back in 2008 in June. This June, it's 194. So
we're less than half of that. And it's, that's a pretty good decrease over 2018. That's about 80 fewer homes on the market now than there were in 2018. So, yeah, inventory, that's what I say, the benchmarking is always interesting.
Right.
Inventory's up compared to probably, the last 3 or 4 years, but in the longer term, it's down.
What are you seeing as far as pendings, homes that have gone under? From a realtor's standpoint, what I'm seeing is homes going under contract, and I'm seeing them fall out of contract. Buyers are getting cold feet. I've spoke with several agents. these buyers, they put something under contract, then during the due diligence period, the period within which they can get out without losing the earnest money.
Yep.
And Packy just gave me the 1 minute finger. What are you saying? What are your
Well,
thoughts?
your sweet spot is between $300,000 and $400,000 or $300,000 and $500,000. The real sweet spot is $300,000 to $400,000.
Yep.
Above that, they start to trickle off. I was just interestingly enough, Fannin County has 11 pending sales between $800,000 and $900,000, but that's kind of an outlier. And Fannin County is always our outlier.
Yeah,
I mean, they just
that's
lead
North
the-
Atlanta. You mean North Atlanta, right?
Yeah. North Buckhead.
Yeah.
But yeah, so that's the sweet spot. There, I would say June, July. The pending sales have been trending up since January.
Right.
July is on pace to match June, but I don't see it exceeding that.
Folks, this has been a deep dive into mid-year review real estate here in the mountains with Chad Hauser. Chad, as always, it's a pleasure. Thanks for coming.
Thanks again for having me.
Thanks for listening, folks.